In January 2019, WeWork was worth $47 billion. It had offices across the world, thousands of employees, some of the biggest investors on the planet, and a founder who promised he wasn't just building a company. He was going to change the way humanity lived. But there was one problem. Behind the beautiful offices, free beer, and billion-dollar valuation, WeWork was losing enormous amounts of money. And when investors finally looked behind the curtain, the $47 billion dream began collapsing. Within months, its IPO was dead. Its founder was pushed out. And eventually, a company once considered one of the most valuable startups in America would end up in bankruptcy. But the craziest part? WeWork's idea wasn't actually bad. The problem was what happened when ambition became more important than reality. This is the rise and fall of WeWork. The story begins in New York City. In 2010, Adam Neumann and Miguel McKelvey launched a simple idea: rent large office spaces. Make them beautiful. Divide them into smaller spaces. Then rent those spaces to freelancers, startups, and small businesses. Think of it like Airbnb, but for offices. And at exactly the right moment, it worked. After the financial crisis, startups were booming. Freelancing was growing. Young companies didn't want boring 10-year office leases. They wanted flexibility, community, something that felt modern. WeWork gave them exactly that. Walk into a WeWork and you didn't feel like you were entering an office. You felt like you were joining a movement. And Adam Neumann knew exactly how to sell that feeling. But he wasn't selling desks. He was selling a vision, and soon some extremely powerful people started believing him. Money began pouring in. WeWork expanded aggressively. New York, Los Angeles, London, Shanghai. Every new location made the company look bigger. Every new funding round made it look more valuable. And then came the investor who would supercharge everything. SoftBank, its founder, Masayoshi Son, became one of WeWork's biggest believers. Suddenly, Adam had access to billions, and instead of slowing down, WeWork accelerated. The company signed expensive, long-term leases on buildings around the world, then rented those spaces to customers on much shorter agreements. When buildings filled up, the model looked brilliant. But underneath it was a dangerous mismatch. WeWork owed landlords money for years, while its customers could leave much sooner. Still, investors kept funding the expansion. And by early 2019, WeWork had reached an astonishing valuation: $47 billion. For comparison, this wasn't some tiny experimental startup anymore. It was being presented as one of the most valuable private companies in America. But now WeWork wanted something even bigger: the public markets. And that's where everything changed. In 2019, WeWork prepared to go public. To do that, it had to reveal something private investors had tolerated for years: its financials. And suddenly, Wall Street could see the numbers. WeWork wasn't simply growing fast, it was burning through staggering amounts of cash. Later company filings showed a net loss of roughly $1.9 billion in 2018. But the financial losses weren't the only problem. Investors began examining Adam Neumann himself. They discovered unusual conflicts of interest. Neumann had interest in properties leased back to WeWork. He had taken loans connected to his shares. And in one of the strangest episodes, he had trademarked the word "we," and WeWork agreed to pay him $5.9 million for rights connected to the name before that payment was later reversed. Suddenly, the story changed. Investors weren't asking, how big can WeWork become? They were asking, at what exactly are we buying? The valuation started collapsing. The IPO was delayed, then abandoned, and in September 2019, Adam Neumann stepped down as CEO. The man who wanted to elevate the world's consciousness had lost control of his own company. But WeWork's problems were only beginning. Without an IPO, WeWork desperately needed cash. SoftBank stepped in. The company cut thousands of jobs. Expansion slowed, locations were reconsidered, and the $47 billion valuation disappeared almost as quickly as it had arrived. But here's the twist: WeWork survived. In 2021, it finally entered the public market through a SPACs deal at a dramatically lower valuation. For a moment, it looked like WeWork might get its second chance. Then reality hit again. The pandemic had transformed office culture. Remote work exploded, hybrid work became normal, and WeWork was still carrying the weight of expensive leases. The business built around the future of offices was now fighting against a future where millions of people needed offices less often. In November 2023, WeWork filed for Chapter 11 bankruptcy protection. The company that had once been worth $47 billion had reached the final stage of one of Silicon Valley's most spectacular collapses. But WeWork didn't completely disappear. It used bankruptcy to renegotiate leases, cut billions in future rent obligations, eliminate roughly $4 billion of debt, and eventually emerge from Chapter 11 in 2024. Its story became something bigger than one failed startup. It became a warning. Cheap money can hide bad economics. Fast growth can hide enormous risk, and a charismatic founder can make investors believe almost anything until the numbers finally arrive. WeWork wasn't really a $47 billion lie because the offices were fake. The offices were real, the customers were real, and the demand was real. The illusion was believing that growth automatically meant value. For years, more funding created more offices. More offices created a bigger story, and that bigger story attracted even more funding. Until one simple question broke the entire cycle. Does this business actually deserve to be worth $47 billion? Wall Street's answer changed everything. And WeWork wouldn't be the last company to discover that lesson. Because sometimes the most dangerous moment for a startup isn't when investors stop believing, it's when they believe too much.